Okay, fellow traders, welcome back. Today, my voice, I'm a bit under the weather, so please do bear with me. Anyways, moving forward, first things first, always make sure that your chart is set to New York. Reason being, we are using ICT concepts, and all of these concepts work along New York time. And also, it's just easier for you to follow along and replicate the process. Secondly, you want to highlight 12 midnight for the day's trading, for the beginning of the day's trading. This is a review for Friday into Sunday, Monday. So, yeah. And then you want to highlight 7 a.m. Once you have that, everything on your left-hand side is going to be your London session. Once you have your London session highlighted, you want to highlight your low and you want to highlight your high. And then, depending when you join the session, which is preferably after 7, since that is the ICT kill zone and the New York session. The strategy works best if you apply it during the New York session. You can use it for the London, but London tends to have way too many retracements and all that, so I'd start with the New York session. It's the best to start off with. Okay, and so first things first, price broke down in the morning, retraced, and then we broke down lower. And then just before 7 a.m., we retraced all the way up to reach for these highs here. And then we broke through, creating a breaker right here. So this breaker here that I just minimized a little bit. On the 15-minute, it's that big. But then that's why when you do your analysis, you use the 5-minute and the 15-minute. And you try and flip back and forth. And then for entries, always use your 5 minutes or your 1 minute, depending how good you are. The better you are, and then you can use your 1 minute chart. But if you're still starting out, I'd use my 5 minute for entries, and I'd use the 5 minute and 15-minute to kind of get the gist of the bias for the day, because we are day trading. Cool. So first move that was available here, as always, I like to draw the shit out so that it sticks in your head. Obviously, there's that little red candle there. We retraced a little bit, went up, retraced a little bit, made that high, retraced, made that high, retraced, made that high, retraced. Boom. So, where is the last breaker? Literally. Where's your last breaker? It's right there. We are using breakers as entries, and I try to make this as simple as possible, because trading is not simple, but it can be simplified to a certain extent. Moving forward, price retraces into a PD array where we are expecting higher prices. We've been bullish all this time here, from about 5 till 8. So for us to just go the other way, something big needs to happen. That's how simple I formulate my bias for the day. And sometimes I could be wrong, because sometimes it could just be sweeping a previous day high, but this is not a previous day high. This is a London session high. So from this breaker here, I'm waiting for price to show me what? To form a breaker and show me that it wants to go to the upside. So as always, 8:30, try not to trade at 8:30, because there's always news. There's always some fake Judas thing. And ironically, let's see, what time is this? Yeah, this move was happening around 8:30, so we actually retraced up. So we came all the way down here, went up, and boom, boom, just very crude depiction. And then at a place where we are anticipating higher prices, we are looking for what? A bullish breaker. That's how you enter. Right there is the break. We create a low, we create a high, we create a lower low, we create a break in market structure. You then focus on the break to enter and go long. Focus on the break, and then you go long. As soon as this candle closes, you wait for anything that is going to try and retrace and touch these highs here that have been taken. Don't wait for it to come to that first order block. It won't always do that. Sometimes it will, and sometimes it's not going to close the fair value gap completely, but sometimes swoop. So something that I practice, as soon as it touches the fair value gap, I enter, I put a small move. If it goes through the fair value gap, I put another move and my stop is right there. What am I aiming for? Low hanging fruit. London session high has been taken out. So what else can you aim for? Previous day high. So there was 3 previous days high, but as always, when I'm explaining how do you manage a trade, if you're watching the trade, then all you're anticipating is to see if when price gets here, it's going to create a high, a low, a high, and then break down. Did it do that or something like that? No, it didn't. Price kept on going up, and created a high, low, and low right here, and then we went higher. So when this usually happens, if price for some reason has been going and expanding on the one side and then retraces and pulls back, something that you will learn by yourself by observing price action is that whenever it does that, you want to take your profit the second time it expands, because usually that means it's creating a higher high. Because why? We make a high, retrace, creating a low, and then we expand more, creating a higher high, and then when you're retracing back in, we're going to take out that low, creating a breaker. Case in point, right here. That's what we have right there. It's a break in market structure, and price may be retracing to some fair value gap over here, which is on the 15-minute chart. These gaps are on the 15-minute chart.